Hello and welcome to Mr. G's Diary, a channel where I document my trades and trading ideas. I am not a financial advisor. Please do not take this as financial advice. Please do not imitate me or follow me or use this for your financial decisions. This is only for my own personal interest where I document my trades for my own personal benefits. So, right now, I've just entered Canopy Growth stock, a Canadian weed marijuana company. And the blue line right here is where I entered at $10 I just bought, and the other blue line is where I will add more if the price goes there. Now, this is on the monthly, so it could take many months before I close this position. It could take years. Who knows? It's a monthly, so this is not. There is no fast results expected here. Even though if there is a big green candle this month or next month right here, I may close the position. I'm not sure yet. Where I expect to close the position is somewhere around here, around 23 bucks. I know this is quite prudent. It could go much higher as it has done in the past, but the thing is I don't really care. I'm just looking for some low risk trades, and we're talking right now about the 132% trade, and that's if my second limit order doesn't get filled. If it gets filled, it's going to be even more. So of course there's no easy trade. There's always a risk, but I'm putting some money that I'm willing to lose. I'm not using any leverage. So this is very low stress trades, gonna take maybe 6 months, who knows. I just find it's a very nice opportunity here. I'll just explain why. Well, first of all, here is where the legalization of cannabis in a recreational way has passed in Canada. Before that, weed was legal medicinally, but recreationally, that was very good for the cannabis companies which were operating here. So you had that massive speculation. And as you can see, after that, it's just been going down. So it's kind of crazy. Shows you how the stock market is such a bubble. It's not that much economics involved. It's really mostly speculation. But anyways, the reasons why I'm interested for this swing trade is, well, first of all, look, there's a massive support here. This is 4 years, okay? I think it is, yeah, around 4 years that the price has been above the level which it is right now at around $10. 4 years, and we're at the lowest point, which was only a wick right here, and it got supported very well, much higher at $14. So I think this is, in average, in probabilities, this is very low price right now. Of course, it can go lower, but I think it's a very low price. You can look at this green line. This is the 50 exponential moving average. So we're talking every month, this line moves and creates an average of the last 50 months. That's a lot of time. And now we're very far below it. As you can see, every time it was below it, it was a great buy. So right now is very far below, which I find, as a hustler, which I consider myself to be, it's a pretty nice price entry. So a low probability of failure for this trade. Now, what can make it go even lower? Well, of course, selling, but what signs I can see that it can go lower? Well, this right here, this is a very nasty thing right here, okay? This cross, as you can see, when these kind of cross happen between the red and the yellow, this is the 10 simple moving average and the 21 exponential moving average. When they cross, whether it's upside or downside, it creates what I call the bearish or bullish posture. The bearish posture is the red below the yellow, and the bullish would be the red above the yellow. As you can see right here, that was very bullish posture, massive gains. But because it's a monthly, there are monthly moving averages, they move very slowly, so they can cross after the dump, as you can see right here. The thing is, when they do cross, you have a very high likelihood of having at least a small move in that direction. As you can see right there, it crossed and then boom, down. And what you often see is that the price will try and avert the cross, try and move above it so that the moving average start moving this way. And they actually don't cross, you see. But it when there's not enough strength, it doesn't happen like it did here. Tried to go up, but then down, so the cross happened and you had to move down. It can create very bad move, very long moves according to the posture. Like right here, it was bullish posture. You had a very big move, so it can be a big move if the cross right here really plays out. Could be a long winter of stock winter of just getting down, 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 bear market. But it's often as well what you see is just a last push down and then some buying action. So I definitely consider this very nasty, so the price could very likely go lower. It's just I had to get in right now with half my position because it's such a powerful support right here for 4 years. I had no choice. And the thing is, the massive dump happened from, we're talking 82% dump from this high to this low right here where we are. And so obviously that would have made the moving averages cross. So I'm not too worried about this cross for those reasons. Also, when I find that in markets in general, and in charts in general, not just markets, just charts of anything in general, when you have a big move like this and you have a space, you see the space, we'll see it better if I remove the moving averages. Right here, the space gets revisited. You see the space right here got revisited here. Then there was a space here when the dump happened, revisited here. Now there's a massive space here. I know it sounds crazy what I'm talking about, but it is true. If you backtest this, you'll see that it's very, very, very probable. Very often it happens that it at least tries and revisit. It doesn't mean it's going to go up to the last stretch of this gap right here, but it's at least gonna try, according to all the backtest I did and all my experience watching markets. So that's why I would sell here. I could obviously try and sell much higher, but I don't care. I think 120% profits in a couple of months is already very good. So is that it? Is there anything else to say? Oh, well, why do I put the support here? Well, first of all, as you can see, my first entry was a massive support here and massive resistance here. So it's not just support, it was both. So this line has been very powerful, very well respected for many, many years. And there's another one right here. You see, when the price pumped, well, first of all, let's go in the past. As you can see, there was some resistance here, a little bit lower. And then when it popped above, then there was a support right here. And then a little bit here, then it went below, then it was resistance here, and then pop above. So it's not clear, should I put my second entry here, which could be pretty good as well. But the thing is, sometimes when I try to get the perfect entry, I just don't get it. It doesn't get filled, so that pisses me off. Messes with my strategy, so I prefer to put it a little bit higher, and I find this is a pretty good place right here, around $6, $6 or $7, because it was, for the reason I just told you, some resistance, and a little bit of support. So and it was supported here, so I prefer to put it a little bit higher, so I have more chances for my order to get filled. Also, last thing. This I consider a lower high than this, even though the real high is higher than this last high. Look at where the candles closed. 2 candles closed right here. So to me, that's where it most of the time happened. It was right here. So I see it as less powerful than this, so a lower high than this. When you get lower highs, you often get lower lows. So that gives me the idea there could be a lower low from here to this one right here. So another reason why it could go, why I expect it to go maybe lower. But the thing is, what I see all the time in markets is you see a very obvious support or resistance, and the price goes a little bit below it, if it's a support, a little bit below it, or if it's a resistance like it was right here, a little bit above it. And that's the trap right here. I always see that an obvious support or resistance gets blasted through and it doesn't last at all. It just reversed. That was a trap, just like you saw right here. There was a resistance here, then it went above the resistance. So many people went there, a lot of liquidity, perfect for a big dump. For people who have massive positions, they want to dump. It's just perfect because everybody gets so excited. It's a higher high, and then boom, in their faces. So if we get a lower low, which would be around this area, I think that would be a massive buy to me. I'm not saying to you, this is not financial advice, okay? I'm just talking to myself here, or anyone who just want to entertain himself with trade ideas, okay? So this would be a trap to me, because as price is going lower, a lot of people will have bought, like me, at the support, and then it goes lower, so stop loss get triggered, people get emotional, they get very fearful, and that's the perfect situation for a bear trap or a bull trap, like right here, happens all the time in markets. So that would make me even more confident that it's a good buy. So that's it. Have a good day.